Hello, everybody. Greg here. So, market continues to be what Dan coined the tale of two markets, where things had relatively severe corrections in a short amount of time, like the Dow and the value stocks and quite a few others, where other things did well. And so today, prices gap down under prior day's low, which you can see right there. And when that happens, at a turning point, typically things tend to continue lower. And so while that occurred, we have a second here. Look at other markets and S&Ps. Well, here, this one was clearly going to be a better setup since it was at resistance and didn't go down as much. So we often talk about catch-up trades where a particular stock or an index um, has underperformed and catches up, meaning it begins to outperform and has a counter trend retracement. And we were looking for that to happen over the last, day or so, and it really hasn't materialized in a significant way. So as prices reach this resistance area, we expect prices to, retrace a gap down, and this is, bounced off of the low here as it retested, and now it's coming up to this resistance area, and it is likely to stall there. So we'll wait for that to begin to happen. And we look at the Qs. Similarly, they come up closer to the resistance area. They went deep into this nasty dark bar, and I just color code these by in our wide range bar scan. I just apply that to the bar, and it marks the wide range bars down or up. And so as this now has retraced, up to that resistance area, you can see it's beginning to stall here. Little topping tail bar. We'll see what it does. About an hour and 45 minutes to go in the day, and it'll be interesting to see if this closes at the low or not. If it does, we'd expect it then to move lower. But as we look at these ones that underperform, let's go back here to the Dow. And it's gone down a lot. This is a tough scenario. Why is it tough? Well, first we're going to see where it's going to close. If it closes like this, it kind of leads me to think a couple of different ways. And let me show you here. If this could take out the high, maybe we get a movement to the upside next week. The thing is about it moving lower, it's just not a great setup when you've got a sell setup so close to a prior pivot low. Now, it certainly could take it out and come down to the next level, which would be okay. But with that support point over there to the left, often what does happen is it takes out the low and it springs back up again. Whereas if we look at the S&Ps or the Qs, this is a much better scenario for taking out the low and maybe going out here because it would provide for a much larger move to the downside. Now, if the opposite is true, right, meaning say the Dow is to go up, this could make a new all-time high next week, which would be surprising with a pattern like this to some extent. I mean, this did retrace deeply, but typically this tends to move down, but where this ends the day will be telling. If this continues to move down and closes low, we're going to have a stronger bias that it goes lower. And if it continues to go up and we get a bottoming tail bar, we have a somewhat neutral bias. But then we've got more of a trading range, which you can see here on the 65 minute. And I can make a parallel line. We'd have a trading range going on there. So as we look at other markets, SMHs, I spoke about pre-market, to look for possibly call spreads. I don't think Dan found any. I talked about AMAT, which was weaker. It's retraced quite a bit. I don't know why this is gapping here. I got a problem with TC2000 today. Others don't. Financials starting to give it up a little bit here. And they've also retraced off of the low. And this was stronger. And so when you start thinking about shorting something that's down this much, it typically doesn't make much sense. Look for things that are near resistance that could be catch up to the downside. Now, this was weaker, and now it's a topping tail bar. So this is a pattern which often turns into a little retest and then reverses back up. We'll have to see if that plays out. Technology still in a trading range there, weak on the day. So many of these we're going to see where they end the day, and we get into next week. Again, the markets are closed on Wednesday, so a split week, which isn't really that great. Better to have had the close day at the beginning of the week or the end of the week. So next year it'll be on Thursday. And, we look at communication services, which have started to roll over. So overall, you can see just percentage change on the week, or relatively neutral, a little bit more negative maybe. Today definitely more negative. You can see mostly red. And just looking at, strong and weak here on the day, we'll sort it that way. You're really decisively negative. The only thing up is TBT, where if this can breaks to the upside on Monday, that should put more pressure on the markets. And what's done the worst? MAGs. MAGs, a Magnificent Seven, led the way up. Well, for today anyway, it's leading the way down. And as you can see, the daily bar is closer to the low, and the 65-minute is really down there at the bottom of that wide range bar. So, we're being selective as always, and, being more nimble since they've got these markets in kind of opposition of each other, and certain markets near resistance, others near support. And as always, we'll play it by ear, see what brings into next week and the beginning of the year. And if you have questions, email us, Greg and Dan at Master Trader.